Hey, what's going on? Hope you're having a good day. My name's Andy. My channel is Finding Value. Thanks for subscribing. If you've subscribed recently, click the thumb up button, do all that stuff. So today I'm going to talk about news versus structural. And what's the difference? What is this channel trying to achieve? And is trying to invest based off news kind of worth it? So let's go in. Let's find out what I've got. So news versus structural. So news-based movements. News-based movements can last for a few days or even up to a week or more. They are only short-lived blips and can be used to accumulate more shares if it was a move to the downside. Sometimes they can last a little longer if the news is used multiple times in a row. But eventually the stock will end up reverting back to the underlying market conditions for the company and the valuations. So what I'm looking more and I'm more interested in is structural changes in the market. So what this is it's the environment that the stock trades under determines the valuations. So it's the environment determines valuations. So a low interest rate environment, a low inflation environment, increasing, decreasing interest rates, and stocks, not our commodities, but other stocks like tech stocks and whatnot, really love low inflation and lowering interest rates. That means lowering interest rates, the act of lowering. Look at valuations relative to other assets. That is extremely important. That is a structural change if something like that happens. So you want to invest in those that have low valuations and you want to sell those that have high valuations. That's kind of obvious. And we want to look for changing market conditions. That is what we need to be looking at. We want to be looking at, is the interest rates changing? Is inflation changing? And what are the drivers of those things that change inflation and eventually end up in higher interest rates? That's what we're looking for. That's the structural changes in the market that will revalue and reprice assets differently. So we also have things that are released, earnings releases that happen quarterly. This can both be news and structural changes. Earnings are what drive stock prices higher, unless you're an electric vehicle company or technology company. Apparently earnings don't matter to those companies. But oftentimes, during earnings releases, they give forward guidance. They give clues to structural changes for the company, and a lot of them also give clues to structural conditions in the market for those companies, depending on the company. Usually the larger companies release more of this, we'll call it structural change environment. So sometimes if you're listening to earnings releases, you can hear guidance and forecasts of structural changes in the markets that those companies are operating under. So we've got pullbacks. So companies can experience very large pullbacks while being under a structurally strong environment. Now, when you're in a positive environment for that company, you want to buy the pullbacks. Just like gold and silver right now, they're experiencing pullbacks in an environment that's structurally good for them. So I would be a buyer of the pullback. That's me. That's my opinion. Tops have market conditions that are changing while you see certain sectors expensive and other sectors very cheap. And what you're seeing is it's a rotation of money flow. And that rotation eventually is going to flow into the cheap asset versus the expensive asset. Because if everyone's already in the expensive asset, the only thing left is for those people to sell out of it and go to something else. What we want to be is we want to be in the front of the pack where we're buying the cheap assets in front of everybody. We want to be first or second. And what we want to do is we want to cost average out of the overexpensive or overvalued assets and cost average into the undervalued assets. It is that simple. So at tops and bottoms, what you should see are momentum changes in the stocks. It's going to be volatile. You should see volume kicking up both at bottoms and tops. Downtrends and uptrends are going to be broken. And right now we're seeing all of this happen. We're seeing I'm seeing some of the tech companies, they're starting to get a little tired. I'm seeing the momentum changes. We haven't seen the uptrends being broken yet, but we see them getting tired. We're seeing the volumes kick up. We're seeing our stocks, their downtrends are breaking, the volumes were kicking way up, and we're seeing momentum changes, and that's why I'm covering this. We're seeing the bottoming process put in our stuff, and I'm seeing the topping process very slowly happen in some of the other sectors. So no one owns, the sector that we're kind of in. We're kind of the first to the party here, a lot of us. And the retail investors, they're all piled in technology and some of these other sectors right now. They are piling in. You know that's a top because the retail investors jump in at the end and they chase prices. They don't chase value. We need to get to the party before everyone else does. We need to be in our own room, just sitting there, chilling, waiting for everyone else to show up to the party. And when everyone else shows up, they bring all the money. It's that simple. So conclusion here is this channel looks at structural changes in the market when it comes to investments. Those structural changes are the dollar, inflation, real estate, the valuations or ratios. We're looking at yields, etc. We're looking at technical analysis of the companies we want to buy. We use news-based moves to buy it. So if it's news comes out and it's not favorable for our stock and it drives it really low, I'm a buyer. Look for large pullbacks can occur in a favorable environment. Buy the pullbacks if the market conditions are favorable to us and the valuations are cheap. Watch the market conditions when it occurs on pullbacks. Keep your eyes on the conditions, because if the conditions are still ripe, you cost average in, and especially if the valuations are cheap. So I am not a news-based investor. I am a structural guy. I look at the market conditions to see if they're structurally changing for the next 4 to 10 years. And if they're changing and the valuations are good, I buy the undervalued asset and I wait until the market conditions change on the back end. So I'm riding this thing for 4, 5, 6, 7, 8, 9, 10, perhaps longer, depending on the market conditions and those forecasts of deficits of whatever I own. So that's what this channel is about. It's about buying the undervalued assets and then waiting for the money flow and rotation of money from other assets into our assets happens. And for prices to go higher from the structural imbalances that the market has for supply and demand. If you guys like this content, click the thumb up button and subscribe if you haven't. Thank you for listening. This is Finding Value.